Good morning, UPBOptionMillionaires.com on this Tuesday, September 5th, 2017, a little less than 2 hours before the opening bell. Futures are lower to start the week, and a lot of it is on the North Korea, again, launching actually a hydrogen bomb test. Remember, the last one was launching a missile over Japan. Futures dropped. We recovered record highs for the NASDAQ. This time, hydrogen bomb test. Also, a lot of noise out there. We have the debt ceiling. We have the tax reform still up in the air, and we also have another major hurricane heading towards the United States. Again, a lot to keep an eye on, and of course, every name sell-off in this market has been a tremendous buy-the-dip opportunity. North Korea, certainly one of the top ones recently. So, I mean, until history doesn't repeat itself, this is going to be another buy-the-dip opportunity. As I pointed out last week at this time, before the start of the trading week, small caps continue to be the leader in this market back in 2016. Started the year, remember, the market was collapsing. This was the end of the bull market. Small caps were pulling back in consecutive days. Got to a point where we reversed sharply. And again, heading into the election, I keep pointing this out. Small caps were the first to go green the Friday before the week of the election, and have not looked back, consolidating and also reversing course before the S&P 500 moving to the upside here recently. Small caps continue to consolidate for a possible break and move to record highs. S&P 500, another the SPY ETF, another one that's consolidating, breaking out now. Also, look at the NASDAQ. QQQ breaking out to the upside. New all-time record high paint and close on Friday. So everything looks pretty good if you want to stay with the trend that's been working since the lows of March 2009. I know the market moves in both directions, but staying with the trend, buying the dip, that's what's worked since the lows of March 2009. And until that changes, why fight it? You could be, this one of the most widely followed pundits said, hey, now's the time to, short to QQQ. That was the trade of the year. Short QQ heading into 2017. Look, it's done nothing but go up. And the main thesis behind that person's perspective was that it was already up 20% in a period of time previously. Well, look, you have a trend, goes up, consolidates, and then continues to the upside, consolidates, continues to the upside until that trend breaks. It's you're pissing into the wind, unfortunately, for the bears, and until you get covered and realize that the wind is still blowing. You're gonna be on the wrong side of the trade. So some of the steel stocks have been upgraded. The U.S. Steel this morning trading to the upside, looked like possible maybe short-term head and shoulders pattern. Now it looks like it's going to head back into the 30s. There was some unusual option volume the last week. Some of these names, AKS looks, and that had some unusual volume here. Hit support. This one looks like it's going to head back over 7. CLF, one we liked heading into this year. Look at this possible head and shoulders pattern breaking out now. Looks like it's going to head back over 10. And then some of the oil and energy names, RIG, like this one, a breakout today over the 855, 860 level and hold over that would set up a really nice move for RIG. And then, of course, we have the XLE, which, again, once it hits that support resistance line, has it signified either, depending on where the break is, significant weakness down to the 50 level. This is heading into 2016. We hit our lows in February. I think it was 49.92 was the low on XLE. Break above, bullish, break below, bearish, but it looks like at least short term we're getting into a negative momentum. Turn around here, we could see energy possibly turn up to 65 here on the XLE. And some of the energy names like RIG, even ExxonMobil, we've seen some unusual call volume in ExxonMobil recently, could be reaching at least a short-term bottom here and a reversal up to the 80 level. A couple other stocks to watch. PanW, I talked about this one heading into last week. Look at this break. I talked about this. Remember the earnings breakdown? Well, I talked about this setup here, and look at this. We came right to support. There's actually 2 analysts out this morning really early. One of them talking negatively about it with a 125 target. The other talking positively about it. But above this support here of this breakout of this wedge, we're going to look at about 170, 180 on the short to medium term. Another one actually went to the downside. AMBA, analyst out this morning, still positive on the name, but really can't get positive on the stock until we break back over. Now, former support. Now this is resistance here for AMBA. And also we look at VMW, analysts to positive on it, and look at this breakout we have to the upside, possibly putting in attest to the record highs that we saw even before the financial crisis of 125. It's at 107 and change. So we're breaking out on those names. One last stock to watch. Got some calls on Friday. Deere, DE is the ticker. And you can see that came up against support even after the breakout to record highs. Came down to support, and we'll see today, despite futures being down, we'll see if this one can get going early, which would lead it up to about 120 by week's end, and that's the type of trade I'm looking for on this name. You can see shorter term. This gap fill, I think, is going to happen. All right, UPBOptionMillionaires.com. So futures are lower, but again, we've seen this nonsense here with North Korea. Just another excuse to get the market to sell down a little bit to get cheaper prices so the dip buyers can swoop in. And the dip buyers being who? The corporations themselves have been reducing their outstanding shares. Saw it this morning. Dunkin' Donuts announced a debt-infused, actually they call it recapitalization, something you would see maybe for a small cap stock or a penny stock. They're recapitalizing their debt structure. They're going to utilize a lot of that extra capital, or what Domino's Pizza refers to as excess capital. You know, the $1 billion they were able to get out of their refinancing to buy back stock and do shareholder-friendly stuff. So as long as this cheap debt market continues and corporations can fund their debt for a lot lower historic rates and utilize that to buy back stock. So here's Domino's Pizza come up against support and bounced. But they're in the midst of a $1 billion share buyback program, which was financed via debt. And this is on top of the $2.2 billion that they already had, that half of which they refinanced with this new recapitalization. Dunkin' Donuts doing the same thing. So again, I mean, it's wise for these corporations to take advantage of the cheap debt. And again, they're using it to buy back their stock, reducing the outstanding shares. And a simple supply and demand says, hey, less shares out there, at least stable demand means prices are going to head higher. All right, UPBOptionMillionaires.com. I'll see you in the chat room. Everyone have a great week.